When you check your stocks or your crypto wallet and see the prices move, what do you think is happening? You probably chalk it up to market news, a big CEO announcement, or just other investors making moves. But what if a huge number of those trades, those instant buys and sells that make the charts so volatile, aren't being made by people at all? They're being made by artificial intelligence. And the brain of that AI, the engine driving its decisions, is very likely made by one company, Nvidia. That's right. The same company that powers the graphics in your video games has quietly become an invisible hand in your finances. It's a hidden force humming away in the background, making billions of calculations every second to help decide the fate of stocks, bonds, and crypto. Today, we're going to lift the veil. We'll break down exactly how this force works, what it means for the future of your money, and what, if anything, you can do about it. Because whether you know it or not, your portfolio is already living in the age of AI. When you hear the name Nvidia, what comes to mind? For most of us, it's all about high-end gaming. It's the stunningly real landscapes in the latest RPG, the roar of a virtual crowd, or the sleek visuals in a blockbuster movie. That iconic green logo means top-tier graphical power. We think of GeForce RTX cards, the kind of hardware that PC builders and gamers obsess over, debating benchmarks, clock speeds, and the magic of ray tracing. This has been Nvidia's public identity for decades, and it's been a wild success. The company was founded back in 1993, not in some sterile lab, but in a Denny's, a true Silicon Valley origin story. The founders, Jensen Huang, Chris Malachowski, and Curtis Preem, bet on a future where graphics would be central to computing. They were right. Their invention of the Graphics Processing Unit, or GPU, in 1999 was a game changer. It turned the blocky pixel world of early PCs into a canvas for photorealistic art. This focus made them the undisputed kings of the gaming world. They built an empire on our desire for more frames per second and higher resolutions. Their tech didn't just stay in gaming PCs. It powered Hollywood special effects, letting directors bring impossible creatures to life. It's in design studios, rendering complex 3D models with perfect detail. This is the Nvidia we all thought we knew, the master of pixels. And if that was the whole story, it'd still be an incredible one. But it's not. It's not even the most important part of the story anymore. Because while we were all staring at the beautiful pictures their GPUs were making, a quiet revolution was happening inside the chips themselves, a revolution that would pivot Nvidia from being the engine of virtual worlds to becoming the engine of the real world's economy. The secret to Nvidia's hidden power is a concept called parallel processing. Think of it like this. A normal computer processor, a CPU, is like one master craftsman. He's a genius who can do one complex task at a time perfectly. A GPU, on the other hand, is like a massive workshop with thousands of apprentices. None of them are as smart as the master, but they can all work on tiny, simple parts of a bigger project at the same time. To create a beautiful image, a GPU needs to calculate the color and light for millions of pixels all at once. A CPU would choke on that, but it's the perfect job for a GPU's army of apprentices. For years, that's all it was used for. But then, in 2006, Nvidia did something that seemed obscure at the time. They released a software platform called CUDA. This was basically a secret key that let programmers unlock the GPU's massive parallel power for things that had nothing to do with graphics. Suddenly, that workshop of apprentices could be used to crunch any kind of data, weather patterns, biological research, and most importantly, the complex math behind artificial intelligence. Nvidia spent over a decade building this ecosystem, essentially creating a market that didn't really exist yet. Then, the AlexNet moment happened in 2012. A neural network trained on GPUs completely crushed all previous attempts at image recognition. The AI world had its light bulb moment. They realized GPUs weren't just helpful for AI, they were the perfect engine for it. Modern AI is built on neural networks, which are basically huge webs of simple calculations. Training an AI means feeding it tons of data and having it tweak millions of tiny parameters until it learns to see patterns. This is, by its nature, a parallel problem. It was a problem tailor-made for NVIDIA's hardware. And just like that, Nvidia wasn't just a gaming company, it had become the one selling all the picks and shovels in the new AI gold rush. While companies like Google, Meta, and OpenAI were searching for AI gold, Nvidia was selling them the essential equipment. As of early 2026, its data center division, which sells these AI chips, now brings in a staggering $51.2 billion per quarter, a 66% jump from the year before. This is the real power. The hardware designed to render a dragon in a video game is now being used to model the global financial markets, predict stock movements, and execute trades in the blink of an eye. This is the invisible hand, and it's made of silicon. To see the most direct way AI is touching your money, we have to look at high-frequency trading, or HFT. This is a world where profits are made in microseconds. HFT firms aren't your typical Wall Street investors. They don't care about a company's long-term vision. They care about one thing: speed. Their whole game is about exploiting tiny temporary price differences. A stock might cost $100 on one exchange and $100 or $1 on another for just a fraction of a second. A human could never act on that, but for an algorithm, that's a risk-free cent. Now, imagine doing that millions of times a second. This is where GPUs become the ultimate weapon. An HFT algorithm needs to do three things at nearly the speed of light: absorb huge amounts of market data, spot patterns, and execute trades. This is a parallel processing problem. An Nvidia GPU, with its thousands of cores, can analyze thousands of data streams at once, running complex financial models to assess risk in milliseconds. And while Nvidia is the dominant player here, with a market share estimated to be over 80%, it's part of a larger technological arms race. Firms also use rival chips from companies like AMD or even design their own custom hardware, all in the pursuit of a few nanoseconds edge. These AI models aren't just looking at prices. They're performing sentiment analysis, scanning news, social media, and regulatory filings for keywords that hint at a price move. An algorithm can spot a positive phrase in a report and buy a stock before a human has even finished reading the headline. The result is a market that operates at an inhuman speed. A huge portion of all daily trading volume, over 50% in US equities, is now driven by these automated systems. This can make markets more efficient, but it also creates new risks. When these systems act together, they can accidentally amplify volatility, leading to wild price swings. This was demonstrated in the 2010 flash crash, where automated selling orders cascaded and wiped out nearly $1 trillion of market value in minutes. So next time you see a stock price flicker, it's not just people trading, it's often a silent, invisible war between competing algorithms battling for fractions of a cent. If the stock market is a high-speed battle, the crypto market is the wild, unregulated frontier. It's a 24/7 global casino known for extreme volatility, making it the perfect playground for AI traders. Traditional strategies often fall apart here because the market is driven as much by social media hype as by any real value. And that's exactly where AI shines. AI-powered crypto bots are getting scarily smart, and their brains are built on parallel processing. One of their main jobs is advanced sentiment analysis. An AI can scan millions of tweets, Reddit posts, and Telegram messages in real time, learning to connect certain words, phrases, or even emojis with price movements for specific coins. It can spot a growing buzz or a wave of fear and make a trade before the sentiment hits the price chart. Beyond sentiment, these AIs perform deep on-chain analysis. They crawl the public blockchain ledger itself, looking for patterns. They can spot dormant whale wallets waking up, track large fund flows, and analyze the complex plumbing of DeFi protocols. It's like having an all-seeing eye on the market's inner workings. AI is also being used to spot complex chart patterns across thousands of cryptocurrencies at once. While a human analyst might track a few coins for telltale formations, an AI does it for the entire market across multiple time frames and acts with cold, machine-like discipline, free from human fear and greed. Now, this is converging with another huge trend: the tokenization of real-world assets, RWAs. We're talking about putting things like bonds, real estate, and commodities on the blockchain as digital tokens. By 2026, this is shifting from an experiment to a core part of institutional strategy. Projections for this market are soaring, with some expecting it to become a multi-trillion-dollar industry this decade, attracting giants like BlackRock. This will bring a flood of complex new data to the blockchain, and managing it all will require the power of AI. The crypto market is evolving from a speculative playground to a new layer of the financial system, and Nvidia's GPUs are providing the intelligence that will run it. The influence of AI doesn't stop at trading. It's quietly rebuilding the entire financial services industry from the inside out. Banks, insurance companies, and payment processors are all racing to build their own AI factories to keep up. One of the biggest uses is in fraud detection. Every time you swipe your credit card, a sophisticated AI model, likely running on GPU hardware, analyzes the transaction in real time. It checks your spending habits, the location, the time of day, and countless other variables to spot anything that looks like fraud. With billions of transactions happening daily, this is an impossible task for humans, but it's perfect for the parallel power of GPUs. In fact, fraud detection is the leading use of AI in the financial sector. The same tech is used for anti-money laundering, AML, compliance. AI agents sift through massive data sets to flag suspicious activity that could signal illicit fund flows, a task that's slow and error-prone for humans. Banks and investment firms are also using AI to manage risk, running thousands of market simulations to stress test their portfolios. Using high-performance computing platforms, they can do this faster and with more accuracy, allowing them to make smarter decisions about how they allocate their capital. And now we're entering the era of agentic AI in finance. These aren't just models that analyze data. They're autonomous agents designed to take action. We're already seeing this with AI chatbots that handle customer service, but the vision for 2026 and beyond is much bigger. Experts predict specialized AI agents will handle tasks like executing payments, monitoring balances, and generating reports. Eventually, different AIs could work together, one to make a payment, another to verify identity, and a third to assess risk, all in real time. Investment firms are already using generative AI to personalize communication with clients and get real-time insights during negotiations. This is all part of a huge investment push, with a recent survey showing nearly all financial firms plan to increase their spending on AI infrastructure, citing major gains in revenue and efficiency. From securing your credit card to managing Wall Street's risk, AI has become the invisible plumbing of the modern financial system. So, an invisible layer of AI, dominated by Nvidia's technology, is running across the entire financial system. What does this actually mean for your portfolio? The biggest impact is a new invisible market force. You can do all the research on a company, read its reports, and conclude its stock is a great buy. But you're no longer just up against other people who disagree. You are now competing with algorithms that exist on a different plane of reality. These AIs trade on nanosecond price gaps and the collective sentiment of millions of social media posts. They don't think in terms of good or bad companies. They think in statistical probabilities. This can cause market moves that seem totally irrational to a human. A solid stock might suddenly tank because algorithms detected a subtle shift in market liquidity. The rules of the game have changed, and the playing field isn't level. This creates a new kind of volatility. While AI can make markets more stable in calm times, it can also amplify shocks during times of stress. A single piece of bad news can trigger a cascade of automated sell-offs as thousands of algorithms react to the same signal at once. This can cause flash crashes that wipe out value in minutes, long before a human has time to figure out what's happening. It also creates a widening gap between big institutions and the average retail investor. The firms that can afford to build AI factories with the latest GPUs and hire the data scientists to run them have a massive advantage. The performance of AI-driven funds is a mixed bag. Some studies show them gaining an edge through efficiency and discipline, while others suggest many still struggle to beat the broader market averages. But what's undeniable is their advantage in speed and information processing. The very nature of investing is changing. The market is faster, more complex, and harder to read. Your own feelings of fear or greed when you express them online or through your trades can become just another data point for an algorithm to analyze and exploit. To navigate this new world, you can't just be an investor anymore. You also have to be a student of technology. Knowing there's a hidden AI force driving the markets can feel a bit daunting, but being aware of it is the first step toward navigating this new reality. This isn't financial advice, but a new framework for thinking about how the game is played. First, learn to think in layers. Investing used to be about the top layer, the company. Now you have to consider the infrastructure layer. Who is building the picks and shovels for the entire digital economy? In the AI revolution, a huge part of that answer is Nvidia. Investing in the enablers of a massive trend can be a more durable approach than trying to pick the individual winners who use the technology. This leads to new ways of thinking about portfolio construction for an AI world. Some investors are leaning into the shift with a heavy focus on the AI enablers and emerging areas like tokenized assets. A more defensive mindset might still include exposure to the core technology, but would balance it with assets meant to hedge against AI-driven volatility. Second, embrace the convergence of finance and tech. The rise of tokenized assets is a perfect example. By 2026, putting real-world assets on the blockchain will be a core strategy for big institutions, not an experiment. As an investor, this opens up new possibilities, like fractional ownership of assets that used to be out of reach or earning yield in the DeFi ecosystem. Understanding this trend is no longer niche. It's part of understanding the future of finance. Third, become aware of the new tools and data sources AI itself makes possible. On-chain analysis platforms can give you a peek into crypto fund flows. AI-driven sentiment tools can give you a snapshot of market psychology. You don't have to be a data scientist, but you do need to realize that a simple price chart isn't the whole story anymore. Finally, what about the AI bubble? Is this all just hype? The initial mania is definitely maturing. Investors now want to see real profits from AI, not just stories. This will separate the real players from the pretenders. But the underlying trend, the massive shift toward AI-driven decision-making, is not a bubble. It's a fundamental technological transition, as big as the internet or the smartphone. The demand for the computing power that companies like Nvidia provide is real and accelerating across every industry. While stock prices will always go up and down, the foundational importance of this tech is here to stay. The next time you see the price of a stock or a crypto coin jump, remember what's happening behind the scenes. It's not just people. It's a silent, invisible network of artificial intelligences, thinking and trading at the speed of light. And deep in the heart of this global brain, you'll find the powerful engines built by Nvidia. This isn't some far-off future. It's the world we live in right now. Nvidia's journey from a gaming company to the primary architect of the AI economy is a story about seeing the hidden potential in technology. For us, the lesson is the same. We have to look past the surface and understand the deeper technological currents that are shaping our world and, yes, secretly controlling our money. Being aware of this invisible hand is the first real step toward taking control of your financial future. This is one of the biggest technological shifts of our lifetime, and we're just getting started. If you want to keep exploring how technology, finance, and AI intersect, make sure you subscribe and hit the notification bell. I have to ask, now that you know about this invisible AI force, does it change how you view your own investments? Let me know in the comments below.